Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's the weekend, so let's quickly recap last week and set up the next open. This week's close gave us a clean split. The S&P 500 and the Nasdaq pushed to fresh records, but the Dow lagged and small caps only put up a modest gain. So yes, the trend at the index level is still up, but the tone was very selective risk-on. Megacaps and AI-adjacent tech led, not broad cyclicals. And now the market walks into a heavy macro calendar, where one hawkish surprise can blow volatility wider, fast. On the weekly time frame, the index-level technicals are pretty straightforward. The S&P 500 closed around 7,165, a fresh high. The Nasdaq finished near 24,836 after a strong momentum week. But the confirmation wasn't universal. The Dow actually closed lower, around 49,230, and the Russell 2000 just inched up to about 2,787, more grind than breakout. Big backdrop here, yields stayed elevated. The 10-year ended around 4.31%, which tends to keep leadership concentrated in the names the market's still willing to pay up for. So what drove that weekly picture? Rotation, money flow basically looked like a barbell. On one side, traders chased semiconductors and AI hardware, especially into Friday. Energy stayed supported too, because crude kept whipping around on geopolitical headlines. On the other side, industrials and Dow-style cyclicals lagged, and rate-sensitive financials felt pressure with yields still sitting in the mid-fours. The takeaway heading into the next open is simple: the trend is up. But it's being carried by a smaller group of leaders, which means any macro shock can hit the weak spots first. Over the weekend, the biggest thing to watch is gap risk. First, the developing situation in the Middle East. Any headline that really moves crude can spill straight into inflation expectations and rates, especially with the Fed and core PCE coming up. Second, keep a quick eye on crypto. Bitcoin was trading in the high 70s, and weekend volatility there can sometimes front-run Monday night futures sentiment. None of this is a trade by itself, but it's the context. It's what shapes whether the next open feels fragile or confident. Stock focus number 1 is Intel, INTC, and this one's a past week mover. The story was the post-earnings explosion that lit up the whole compute and semiconductor complex into Friday. When a big liquid hardware name rips like that, it doesn't just move one ticker. It can pull in index buying, dealer hedging flows, and momentum chasers. Heading into the next open, it matters because it's a live read on whether the market still wants the hardware trade, or whether that move was just a one-day squeeze that fades as macro risk takes over. Next up is NVDA. This is a next week watch. NVDA is still trading like the market's AI beta and in a narrow leadership tape that makes it disproportionately important. If NVIDIA holds its highs through Wednesday's Fed communication, it usually helps the Nasdaq extend. But if rates pop and long duration gets hit, NVIDIA can be where the unwind starts, especially if positioning is crowded. Heading into the next open, it's one of the cleanest tells on whether risk-on is broadening or getting more fragile. Stock focus number 3 is Microsoft, MSFT, and this is a next week watch as index ballast. In a week like we just had with narrow leadership, megacaps can keep the indexes looking strong even while breadth quietly deteriorates underneath. Heading into the next open and into the Fed, Microsoft matters less as a headline mover and more as a stability check. If yields jump and Microsoft starts slipping, it can open the door to a broader de-risk across large-cap growth. Now let's talk XOM, XOM as a next week watch and a macro hedge. This past week, energy held up because crude was trading headline to headline, and that matters. Oil can feed straight into inflation expectations. Over the weekend and into the next open, if crude gaps higher on geopolitical news and Exxon catches a bid while tech cools off, that's your inflation scare rotation signal. And with core PCE on Thursday, this is one of the cleaner macro leak tells to track. Fifth stock is OKLO, OKLO, and this one's a past week mover that's really about the speculative pulse, not near-term fundamentals. The partnership headline tied to the AI power story sparked a momentum burst, and then you saw profit-taking into Friday. Classic high beta behavior. Heading into the next open, OKLO's a useful sentiment gauge. If it holds key levels and firms up, it says the speculative bid is still alive. If it rolls over hard, that can be an early warning that traders are de-risking ahead of the Fed and Thursday's data pileup. Heading into the next open, here's the week ahead setup. Tuesday brings consumer confidence, and that can shape the early week tone. Wednesday is the main event, the Fed decision, the statement, and the press conference, where the rates path can get repriced very quickly. Then Thursday is the heavyweight combo, advanced GDP, core PCE, the employment cost index, weekly claims, and the GDP price index. Friday wraps it up with ISM manufacturing and ISM prices. With the S&P 500 and the Nasdaq sitting at record levels, the key is risk management. Know your levels, expect faster moves, and don't be surprised if volatility expands around those release windows. Wrapping it up, last week the trend stayed up, with the S&P 500 and the Nasdaq closing at record levels, but leadership stayed narrow and the Dow lagged. Over the weekend, keep one eye on oil and one eye on crypto. They can set the tone for gaps into the next open, and for the week ahead, the Fed and core PCE are exactly the kind of catalysts that can reprice rates and markets. Fast, get some rest, and come into the week with a plan for volatility. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.